Now, those cane farmers of North Queensland we've just seen can take heart from current raw sugar prices. After slipping earlier in the week, sugar bounced nicely with gains across most contracts. The most active contract is for March, which closed down a fraction under 1 cent for the week. Now, last week, in a good example of cross-industry cooperation, workers who might have lost employment in the sugar industry because of weather events are now being offered possible employment by cotton growers.
With the big crop, there'll be a big requirement for harvest people and harvest labour. And so we're looking at a program called Operation Harvest Help, which we will look to the cane industry who at present have a surplus of labour, and hopefully we can look after their staff for a short period of time through our harvest and they can go back into their industry.
Now, cane and cotton growers are cooperating in this venture, and there's a Harvest Help hotline to recruit would-be workers. That number is 1800 062 332. That's 1800 062 332. Please call during office hours. Now, cotton, and what can one say? It's cracked the 200 cent mark for the first time ever. And as the price rockets, it's being reported that the 23 million cotton growers in China are hoarding their last crop, waiting for an even bigger price. Here's a check on how cotton has travelled over the past 5 years. It's the most remarkable spike. The price has doubled since July. Now, 2 points about the cotton bubble. First, and the absolute certainty is, all bubbles burst. And second, the forecast is for global cotton production to rebound to a record 27.6 million tonnes. Here's the New York price, up substantially last week to a price I heard one grower describe as scary. And I'm also told the offer in the cotton paddocks around Sir George Gundawindi last week was an unheard of $1,000 a bale. Moving to grains now, and ABARES is forecasting Australia's winter crop to be the largest in 7 years. One can only imagine what might have been without the extraordinary wet on the east coast and without the drought in the west. Wheat production should reach 26.3 million tonnes, a big rise on last year, while barley is also up and canola production also lifted nicely. Grain sorghum is having a bumper season. This season passing saw production go up 39% on last year. Now, local prices were a little soft last week, probably reacting to our firming dollar. Canola retreated $25, while wheat fell a fraction and sorghum was firm. The futures trading was also a little easy, but still pretty good in historical terms. The nearby March contracts are settled at $359 in the west and $20 less for New South Wales milling wheat. Now, market chatter in Chicago centred on the massive drought in China, with traders getting edgy about where prices might go for wheat if that drought continues. There's also talk of China removing, or at least cutting, import duty for ag products. Soybean slipped on the back of a massive Brazilian crop coming up. Wheat fell but remains $3.50 above the price this time last year, and corn continues its ethanol-powered surge. That price has doubled since March of 2010. Now, Australia's beef industry is in for a good year. This is MLA's opinion and comes amid problems in our live export trade and the overwhelming spectre of our rising dollar. MLA says industry growth will be led by emerging markets such as Russia, the Middle East and Southeast Asia. Last week, MLA stepped up its Russian marketing with a meet and greet at the prestigious Protexpo food fair in Moscow. Importers were invited to sample Australian beef and touch base with an Aussie producer, in this case a grazier from Charters Towers.
Well, we see the Russian as an emerging market, and we're producing a high-quality product. And we thought we'd bring it to Moscow and present it to the Russian people, get a reaction from them, and see where we go from there.
And what has the reaction been? What sort of
feedback are you getting?
It's
been very good so far. We have some product here in Russia now with the company, East West, which they're going to take to their restaurants and get the feedback, and then they'll come back to us.
And our reports indicate the Russians are loving Aussie beef. Our exports are tipped to touch 70,000 tonnes this year, up from 53,000 in 2010.
Of course, there are many reasons, and we can buy the more safe, more quality beef, and with a lower price. The price is lower than the meat from Brazil.
MLA remains wary but confident.
even though Russia's been developing as a commercial global trader for 20 years or more than 20 years now, there are still a lot of new or reasonably new businesses that are involved in the meat industry, so we don't have the same sort of long-term historical relationships that are in our traditional markets, and the market is still very much evolving, not just from who the players are but also what they do. So we've got new companies that are getting involved in purchasing Australian meat, but also we've got growing market sectors, and a good example of that would be the steakhouse markets in Moscow, which we've seen grow significantly in the last 2 or 3 years, which is now a great market for Australian high-quality beef. So places like this allow us to showcase our product, they allow us to get exposure to a large number of people in a short period of time. It allows Australia to also showcase the range of product we have.
That's Jason Strong, MLA's boss in Europe. Very interesting to see that Russian buyer concede he could buy Aussie beef cheaper than beef from Brazil. Incidentally, Jason Strong will be back in Australia this time next month, taking part in MLA's latest Meat Profit Day at Bingara. Now to the prices, and the National Livestock Reporting Service has described restocker and feeder demand as red hot, and slaughter numbers are booming as dry conditions emerge. Most of these prices are well above the levels for this time last year. It's hardly surprising given the amount of feed available, and competition is especially keen for younger cattle. And the Eastern Young Cattle Indicator is firm at $3.93. And firm is not the word for lamb prices, more like strong and strengthening. Last Friday week at Cara in New South Wales, a pen of 39 lambs went for an Australian record of $240 a head. Ballarat went close last Tuesday with $239 a head, but for the moment the lamb title is with New South Wales. Our lamb indicator lifted 29 cents for the week, while mutton went along for the ride, spiking 21 cents. That's close to the lamb price of about 18 months ago. Checking dairy now, where the headline is all about the milk discounting by Woolies and Coles, but the real story is the price of butter and skim milk powder. World supplies are as tight as a drum, stockpiles are down in America and Europe, and demand is up and up. The official Oceania price range is close to $4,900 for butter, but I'm told unofficially it's well above $5,000, and skim milk powder demand has pushed the unofficial price close to $4,000. Finally, to wool, which continues its bull run. The market is up more than 21% since January and a remarkable 42% since the start of the season. The Eastern Market Indicator lifted 1% last week. China was dominant, with Italian buyers on top at that fine wool sale in Melbourne. Tim Lee has been looking at the surge in wool, and we'll have that report on next week's program. But for now, and for a change, a pretty good week for most commodities, and that's the Landline check on prices.